Now, after that, generally the other investors or founders will get to catch up and receive their interest to or distribution equal to whatever their ownership percentage is before the investor receives any additional money on top of that. But once they have caught up, as they say, and they've received their respective return on investment, then the investor will negotiate participation rights. This means after receiving their liquidation preference and after the other shareholders or founders have caught up in their distribution, any amount of money left over from the liquidation is distributed to the parties based upon their ownership percentage or based upon participation rights. So say I'm a 10% owner and I have a 3 times liquidation preference, I will receive 3 times my money before anyone else receives their money. Then the other parties will catch up and receive their respective share of the distribution. And then anything left over, whatever my participation rights are, if it's 10% because I'm a 10% owner or 20% or 30%, whatever I've negotiated, I'll receive that percentage of the remainder of the distribution. So participation rights are very important. Conversion rights, I may need or want at some point in the future to convert my preferred shares into common shares. Mandatory conversion is when it's necessary to convert in order to not thwart any transactions that the company's going through, like a future financing round or going public or something like that. Voluntary conversion rights is when the investor has the right to convert their shares into common stock. And this is normally when the investor wishes to sell their ownership interest to third parties, and they want to put the shares that they sell back on equal footing with the founders and other parties to get rid of that class of shares. Anti-dilution protections, this is protection of the investor. That means that their preferred shares are not subject to dilution. So if there's a future financing round and more shares are issued, or there's a stock split or something like that somehow affects the overall capital structure, meaning that there are more shares out there causing the current shares that the investor holds to be worth less, anti-dilution protections say they will adjust the conversion rate between preferred shares and common shares so that basically the investor in no event is diluted.